Good morning, this is Giuseppe Basile. I'm the analyst and trader. You can find at the blog FibonacciStalking.com. I also regularly post on Twitter using the @FibStalker nickname. Good morning, today is Tuesday, October the 13th, 2012, and it's 10 to 11 a.m. Italian time. I want to remind you that Italian time zone is GMT +1. This is a review of the euro-dollar, particularly the EURFX continuous contract traded on the CME, and what you see on the screen is the daily chart of the continuous contract aligned to the December 2012 expiration. You will remember that in the last 2 months, basically, I've been waiting for price to trade this 126.30 area. In some occasion I asked myself whether this time in 2012 it was different from 2009 and 2011, when price approached this huge level of support we have here below in 121.50 area. If you want to get information about this, just review the weekly review of the euro dollar, and you will get a long-term view on the euro dollar as well, and where the euro dollar is with regards to the largest time frames, monthly and weekly. Going back to today's analysis, I was saying I expect now price to trade into the 126.30, and we had this confirmation when price violated on the downside the 127.37 level. In the last 4 weeks, we had this sequence of measured move lower, which started with this first draw showing resistance in 130.20 area. It hit the first and second target, and then it started extensions. The euro price was quite sloppy, and it never traded this next measured move higher, and it did not this week as well. So yesterday high was probably the high of the week. Price never got into this 127.90, which was the next setup of this sequence lower. As I showed you yesterday, price yesterday traded a measured move that is well visible on the 4-hour chart. It's a little bit more difficult to see it here, but still we can witness participation at the 127.45-40 area. And yesterday I indicated this setup as well, and today the setup hit the first target in 126.70 area, and actually traded to the pip. It traded to 126.69, which I indicate here. So this is a further confirmation that these levels are highly participated, and the reason why we see profit taking in these areas because these levels are watched by program trading. So at the moment we have 3 possible scenarios. We can have a price keep sliding lower into the next level of target, 126.30 area, or we could see the next traditional measured move trade, which means the price should climb higher into the 126.05, 12600 area, and again we would see then price start moving lower again. There is another possibility here, that we actually get a stronger reaction higher, and this would bring price into the 127.80 area. I think it's less. This scenario is less probable at the moment, so I would probably expect price to keep sliding lower. I hope this update is interesting and it's useful for your trading. Yesterday I also published an important review on the weekly and daily charts of the SP 500, and I believe SP 500 euro and dollar index are highly connected, and it's very important to understand what these financial instruments are going to do in the next few days, and maybe this and next week, because we're going to probably witness a change in the market with resumed weakness in the dollar index, resumed strength in the euro dollar, and we need to understand whether we're going to get a divergence between the euro and the SP 500 as I contemplated in the last few weeks. And I invite you to read the article related to the possible US indexes collapse. So the next few days are going to be very interesting and important, and very exciting as well. If you want to receive my midweek update I'm going to send tomorrow, just go to my website and subscribe my newsletter. I send these updates only to my newsletter subscribers. The newsletter is for free, so you can subscribe without problems. I wish you a very good day, a very good trading day, and I look forward to see you on my blog, and thank you. Bye bye.